Good morning, everybody. Happy Monday. My name is Gareth Soloway, Chief Market Strategist, and this is the game plan or my trading game plan for the day at verifiedinvesting.com. All right, so listen, Friday was an impressive rally in the markets, but these are signals here that people should be very aware of. Number one, the Fed basically said, yes, we are going to probably be lowering rates in September. But the way they said it is honestly scary. And I say that because Jerome Powell in his speech said inflation is continuing to rise and it likely will continue. The jobs market is weakening and it will likely continue to weaken. He then said basically that because of the jobs market weakening, we will have to see Fed rate cuts. Now, ultimately, what is the term for stagflation? It is rising inflation in a weakening economy, aka Jerome Powell just said we are now in a stagflationary world. Okay. Now, again, stagflation is the worst type of inflation we can have. Usually, inflation occurs when you have a good economy and people are making so much extra money that they can afford to spend on higher prices. But when you have a slowing economy where people are losing jobs or making less money and inflation is still going up, that is bad news. But ultimately, cutting rates in a stagflationary economy, that is not necessarily a good thing. In fact, it should scare us all. All right, so I just wanted to make that clear because I do think that the rally we saw on Friday could reverse its entirety this week, and we could see a big breakdown in the markets. Let's take a look at the charts and get right into it. This is the S&P futures chart. And what we have here, folks, is the S&P on Friday with that monstrous surge to the upside on the back of Jerome Powell's surprisingly dovish comments. Now, from basically 10:30, 11 a.m. Eastern time, the markets chopped sideways the rest of the day. It was a Friday in August. Now, last night, the futures opened slightly higher. We started to fade, and we've really continued to slowly fade throughout the overnight and into this morning's stock market open, which is just under 30 minutes away. Now, again, this is going to be something we want to really watch. How much of the gains do we give back today? And ultimately, do we see more give back in the coming days? Now, something that can give us a heads up on that is the S&P daily chart. Here's that S&P daily chart where we have our trend line that has literally pinpointed each major low going back to 2023 and then August 2024. We then obviously had the big breakdown with the Liberation Day sell-off, and then it literally pinpointed the high in July and the high in August here. And that's each time we saw a pullback where to this lower yellow trend line that starts in May. Now, again, what this is called is a wedge pattern. And a wedge pattern is two trend lines that are getting closer and closer together, right? So you could have it like this. This is kind of the wedge pattern we have. But essentially, price starts to go like this inside of the wedge, and it builds like a spring or essentially a under pressure environment where when it breaks one way or the other, we get a big major move. Now, in technical analysis, what we know is that in general, upsloping wedges break to the downside. And again, remember, when I say in general, that doesn't mean every single time. What it means is odds favor that. Okay, now again, I would say about a 70% chance that the upsloping wedge breaks to the downside if you take in all the wedges in charts going back throughout, let's say, the last 20 years or so. All right, so if you have that information, and then we add in the fact that you don't really break down on the first three hits of the trend line, the fourth hit is the 50-50, and 50% odds is essentially even, right? It is even. We had a bounce. The idea is if we come back down here, your fifth hit would then be favored to break down by about 60% chance. All right, so again, watching this very closely. Now, we also have to monitor the upper range here, which we've only now tagged 1, 2, 3 times, or actually just 2 times. So it's somewhat unlikely we would break to the upside. In fact, it is not favored based on the amount of hits of this trend line, the third hit would likely get rejected. And so really this pattern formation does favor downside potential. Obviously, we'll have to watch and see how it plays out in the coming days. All right, QQQ, same sort of deal. 1, 2, 3, 4, 4 hits. We actually closed fractionally below the trend line here. The question then you ask yourself is, did it confirm the breakdown? The answer is no, obviously it did not. So it was a fake out here, which again often happens when you don't confirm a breakout or breakdown. Sure enough, we got a big bounce, but sure enough as well, the QQQ is trading lower this morning by about 1/3%. So we're going to monitor this because this was your fourth hit. So we've now bounced. This would be your fifth hit. If we come down, we'll have to watch and see. Now, couple other stats that have me concerned. All right, guys. And again, I always try to bring you the inside scoop that you're not going to get on social media or you're not going to get from the mainstream media. So one of the things that's alerted me to being a little bit more nervous this morning about the market, even in spite of the rally and the dovish commentary by the Fed or Jerome Powell, is that margin levels, which is how much money is being borrowed to invest in stocks, that is at an all-time high now. So we went from early on this year, kind of investors not being over leveraged. They are certainly over leveraged now, margin again at all-time highs. Again, that's how much money is being bought. So in other words, investors generally believe so strongly that the market will go up that they're basically borrowing money at an interest rate to put it into the market. And historically, that has been a bearish signal. When people get too confident and they start leveraging up, and what it can cause is forced liquidations that can accentuate or accelerate downside in the markets. Another thing that has me concerned is zero-day options. The amount of volume in zero-day options is at the highest point at all-time highs compared to overall options volume. So if you look at all the volume in the options market, zero-day options now have made up over 65% of the volume on a daily basis of all of options. And again, the reason why that's concerning is that zero-day options are basically gambling, right? So it's people saying, hey, listen, this market just always wants to try to go higher. So let's just gamble because this is a payout. This is a bet that's been paying out lately. And when that gets to that level where people are gambling again, it is a concern to me, and historically it has marked some sort of reversal in trend. All right, now again, how big of a sell-off? We don't know, right? I mean, we didn't know how much the Liberation Day sell-off would take us down, and we don't know this one, but we can follow the charts to make sense of it. All right, flipping over here to the dollar chart. The dollar, again, is bouncing a little bit. We did break this trend line. It has not been confirmed as a breakdown yet, and we are retracing to the underbelly of the trend line. So not a whole lot to talk about here because there's been no confirmed breakdown in the dollar. We could still confirm, though, in the coming days. The 10-year yield also bouncing back after the big drop on Friday. This, again, is a classic bear flag. One thing to kind of keep an eye on, there's a secondary trend line that we can draw in here, basically connecting these recent lows. So we'll watch to see if the 10-year yield breaks to the downside below this line. That would give us an additional factor of expecting further downside. All right, let's take a look at some stocks in motion today. There's not a lot of big earnings here this week until NVIDIA on Wednesday after the close. That will be a mammoth for the market, but we do have Intel trading up a little bit on the day. If we take a look here, you can see again, we see it trading up on the back of the U.S., taking a 9.9% stake in Intel. And again, you can argue whether this is good or bad. Ultimately, historically, the government getting involved in businesses is not generally an efficient way of utilization. But again, that's where we are today. We are seeing, again, the U.S. government getting a 10%, essentially 10% stake in Intel. In terms of trading, we can see that it popped on this news expected news a few days ago last week, putting in a classic little double top here. I don't really have a trade on this. Overall, if it breaks above this 2640 level, you would expect this secondary high at 2750. But again, we're not even close to that, trading at 2519 pre-market. Now, NVIDIA does have earnings here today, guys, so we have to monitor, not today, excuse me, on Wednesday after the close. We have to monitor this very closely because this upsloping trend line has broken. And what that does is it puts NVIDIA in a tougher spot from a technical analysis perspective. All right, listen, you could argue whether their earnings are going to be great or not. I think they're going to be great, but I also think that it has been priced in most likely to the most part. Now, listen, when you break a key trend line, oftentimes we can see a retrace to the scene of the crime, which would be back up here, even making a new all-time high, but it still limits the upside now. And that's the problem with breaking a trend line. Like wherever you break the trend line, it limits it now here. Like over here, if it had broken, it would have limited the upside to that point. And so now that you've broken, yes, you could go a little bit higher, but the skewed angle of probability is now favoring a turn to the downside in NVIDIA. The more it rallies today or tomorrow going into earnings or even Wednesday before they report, the odds would then continue to favor more and more downside action. So again, I would be slightly bearish going into earnings, but only understanding that it's still possible for it to rally up to this trend line. It just probably wouldn't go higher than that. So again, you can really limit that upside risk potential on a short if it were to make a pop, since you have that trend line now to trade against. Take a look at this chart on Alphabet. Alphabet again, surging recently, kind of getting its mojo back, but you have this beautiful ascending trend line that has marked major tops. We just tagged it on Friday, and then you also have a double top gap fill right here. And so really there's two factors of resistance on Alphabet in this near-term chart, and that would favor a pullback in Alphabet in the coming days. Taking a look at Meta, nothing much on Meta. It's down a little bit today after the bounce on Friday. Again, notice how this trend line that I've shown you guys for quite some time worked once again over the last week to reject price and bring it to the downside. Now let's turn our attention from some bearish charts to some bullish charts. KWeb, guys, take a look at KWeb. I gave this to you guys on Friday in my trading game plan. And I said, listen, look for the breakout here. It looks like it was even opening above this line. Sure enough, it closed strong and is trading up again today. So while the stock market for U.S. equities is down, China stocks are looking very strong here with Pinduoduo reporting earnings this morning. I think that stock's around the flat line, but good continuation upside on KWeb. If we zoom out on this chart, you can see again, this thing's been beaten down. I mean, you look at US stocks and they're trading at all-time highs. You look at this chart of the internet Chinese stocks, and it's just breaking out to the upside here. All right, Baidu's another one of my favorites. It hasn't broken the trend line yet, but it will be opening above that trend line today. Could be, again, a beautiful setup for a major breakout on BIDU. Look for any daily close above 91.15. It's already trading at 92.30, but again, it could reverse intraday. We'll have to monitor that. All right, let's flip over to Bitcoin real quick here, guys. Bitcoin, this is crazy, guys. So again, if you watched the video on Friday, I gave you guys the expectation that this was just a bounce before a reversal lower. And it wasn't my personal belief. Frankly, I'm a bull on Bitcoin longer term. It was just the chart. The chart, again, classic double top, reversal candle, red candle, told us downside coming. We closed below this longer term upsloping trend line. We confirmed. Okay, once it's confirmed, essentially this becomes major resistance. The big bounce on Friday on the dovish commentary by Jerome Powell took us all the way up to about 117,400. It missed my level. I said 118 would be major resistance. It didn't even get there. It did not even get there. And sure enough, 1, 2, 3, Saturday, Sunday, and Monday here, Bitcoin has moved to the downside, even making a lower low. Okay. Now, again, on a technical analysis basis, this is your next line to watch at 112,000. A daily close below this would be one step. If it confirms, I honestly think you're heading back to 100,000 on Bitcoin. But let's watch and see where this candle closes. Does it close below 112,000? Does it rally back above 112,000 today? Can it be saved? But ultimately, again, this chart, a classic case study in technical analysis, how again we broke and we confirmed, and then this level tells us we're going to get rejected and come back down, and that's exactly what happened. Now let's take a look at Ethereum or ETH here, as ETH again having a good push up, making finally a new all-time high above its previous high back from 2021. Brief and short-lived as it's come back in here. Now you can see there's this parallel channel that I'm monitoring, and the reason again is it gives us an upside kind of resistance zone around 5,100 or so. It hasn't even gotten there either, right? So in essence, it's come back in, but I still think ETH could make one more push up to that higher end. If it does come down, notice how this former support level or this current support level at 4,065 to 75 is also the lower band of the upsloping parallel. And so this is going to be your big level. If you're a bull, you need to see this 4,000 to 4,075 zone. That needs to hold. If that breaks, the floodgates are likely going to open. But as long as this holds, I think you remain bullish in the near term for ETH to push up and make one more attempt at touching the upper band of that parallel. All right, let's flip over to gold and see what gold is up to today. It is down fractionally. Gold had a little bounce on Friday on the weakness in the dollar. Today, the dollar bouncing, so it's coming back in. And really at this point, we continue to have kind of a chart that is still below in the near term this upsloping trend line and the double top, right, or the pivot high. And so as long as it remains below here, I do think gold could still come down a little bit more. But keep in mind, this is only short-term analysis. Longer term, it's a classic bull flag. And eventually it should break out to the upside. I still have an upside potential target north of 5,000. Granted, that's still a year plus out, but I still think, again, you're still looking at that as long as the U.S. government continues to kind of spend and run up the deficit. You got to think gold continues longer term to the upside, much like Bitcoin probably will as well. Taking a look at silver here. Silver again pulling back as well. Had a nice move on Friday. Same sort of deal. Not at high-end resistance yet around this 39.75 to 85 level. And same thing, it's not into support. It's kind of just chopping. You could make a small case for a little bit of a head and shoulders here, but I'm not ecstatic. It's not a great setup there. So for the most part, I'm just sitting on the sidelines here and waiting to see, do we hit resistance or support to make my determination about what the next move is. In other words, right now I'm more neutral on silver in the near term. Let's take a look at oil. Oil had a bounce later last week. It continues to kind of grind up. I do think there's a short opportunity at this retrace. So again, why would this be a short opportunity? Well, simply put, you have this trend line, which was your bear flag base, right? So here was your down move, bear flag base, and you broke and you confirmed. Confirmation, by the way, did not happen the next day. It happened on the third day below the trend line, but it absolutely did confirm the breakdown. What that means is this trend line now becomes major resistance. In other words, once it's major, to me, it becomes an opportunity to trade off of that line. If it's minor, I don't mess with them. Minor is probability-wise close to 50-50. Major, it gets into that 70+% opportunity. And so for me, I'll be eyeing oil if it trades up to about $65.65 to 75 cents. To me, I'll be looking for a swing trade short with a target down to about $60.65. So again, it wouldn't be quite 10%, but it would be getting close to that for a quick swing trade to the downside. And then lastly, natural gas here, folks. Nat gas again, pulling back. Well, it was down a little earlier. It's coming back, but I still have it where it still has its eyes, its classic eyes here on essentially a move to this $2.65 level. All right, so next what I want to do here, folks, is essentially do some Q&A. You guys know I've been trying to answer some of the questions that you guys post under the videos. As always, I appreciate the comments. The kind words are absolutely amazing. So a couple questions here. So number one, if the 10-year yield falls, is that good for large cap stocks? So the key is this. It's kind of weirdly enough a double-edged sword. If the 10-year falls and it's due to the Fed lowering interest rates, but the economy is staying strong, yes, cheaper money, as long as the economy is maintaining its strength, is good for large caps and even small caps. But this is the kicker, guys. If the 10-year is dropping because the economy is cratering, what do we know happens when the economy slows? Earnings go down. And in which case you have to have the multiple. And by the way, the US stock market is now pricier than the .com and pre-depression stock markets were. All right. You have to look at it and saying, hey, listen, if earnings start to stumble, there's such a premium in this market that even if the 10-year goes down, if that's why it's going down, that is not good. And then lastly here, folks, one other question is on Tesla, wondering about the Tesla chart. We can jump back to the charts and take a look. Let's go back here. Here's your Tesla chart. Had a great move on Friday, folks. Looks like it's pulling back just fractionally today. Notice again, we have this wedge. You have the downsloping wedge, high pivot, pierced it here, never closed above, touches it right here a couple times, broke out, retraced. Tesla is still hanging in there. Listen, it's hard to pay up after a big day, but overall, this chart remains bullish on Tesla as long as you do not break this underbelly zone here. Anywhere between 315 and 308, you would not want to see price essentially get below 308 and confirm. If that happens, it's going well below 300, but at its current levels, it is still in short-term breakout mode. So again, that would be viewed as a bullish chart at this time. All right, guys. So I'll do my best to get to 2 to 3 questions in each of these My Trading game plans. Don't forget, guys, you see the QR codes there. Make sure to follow us on YouTube and on X. We have posted lots of amazing content. Don't forget, guys, that even before my show, there's the RSI trade of the day that my head trader does, Ben Poole. He goes over a trade every single day that's actionable that day, that's tradable that day, using RSI. So not only do you get education, but you get a trade of the day every single day. They're amazing opportunities. And then we also have the AMA Ask Me Anything when Lawton at right after the noon hour there. And that's a fantastic one. I believe it's at 12:30. And then, of course, Trading the Close with Drew Dosick. He knows his stuff. You guys know it. He's a rock star. There's no doubt about it. All right. Thank you guys for tuning in today. I'll be back with more alpha tomorrow morning. Let's see where this market goes. Take care.